Hey everyone, welcome back to another market closing live stream. So we have a market that isn't actually really reacting to Nancy Pelosi goes to Taiwan. It's really not that big of the deal. The Nasdaq's flat. We've got Enphase. It's still freaking killing it. I got stopped out of my short on that one. It was a tiny position relative to the portfolio, but goddamn, like that's euphoria. I don't know who you are or what you think, but wow. You look at just the Enphase chart, which you can't see for some odd reason, which I will get to the bottom of. Dang it. Then you're like, oh yeah, okay, oh there it is. Yeah, there we go. Okay, yeah, totally sustainable. But okay, whatever. There's no way it's ever coming down again. Whatever. No, dude, this is ridiculous. Great company, phenomenal company. I'm about to go spend more money on these Enphase panels. So what I've decided is I'm going to wait for the broader market to have a little bit of a dipsy doozies. And when we actually get a more of a dipsy doozies, that's probably going to be the time to short Enphase. And of course, when I do, I'll send an alert to everybody in the course member live streams. Now, look, we have a good week to go, a week and a day, I think ish. Oh, my hair's a mess. A week and a day or so to go before we get CPI data. That is going to be what this market cares about. That's it. Okay. If we get CPI that comes in over expectations, which expectations are like glorious right now, we're going to have, we might revisit that 23.6 line on the QQQ here. And that could give us the move down that we need to really top off our portfolios a little bit. Now, remember right now, the expectation for CPI is the following on screen right here. It's 0.2%. Which is basically an annualized move of 2.4% of inflation. That's insane. But so like, while that seems great and exciting, it's like, yay, the expectations are 2%. It actually, what it does is it sets you up for this belief that, oh yeah, it's definitely coming down next week. Great. Well, what if it comes in at 0.3? 0.3 is still a lot better, but then it's a miss. What if it comes in at 0.5? Well, that's a whole lot better than what it has been, but then it's a terrible miss, right? So, like, the fact that expectations are this low for CPI, in my opinion, is actually a bad thing, not a good thing. A little bit of a bummer, but, what are you going to do? So that does create the potential for either a catalyst before or after to a move down. Now, remember, I am mostly in this market. I want this market to go up. When the market's going up, I try not to look at my portfolio because it's just like, it makes you feel happy. And that's a bad feeling. You don't want to feel happy when your portfolio is green. You want to try to rejigger your psychology to feel happy when things are on sale. But that's hard. You are literally having to do the opposite of what humanity has programmed you to do. And it's not as simple as changing the colors on the sticks, man. You know what they mean. You can't trick yourself that easily. Anyway, let's see what happens. It does look like we potentially are going to have a little bit of a move down into the close. One of the things that I thought was really interesting today was we got right here. This was right here during the course member live stream. This was remarkable. I wonder if I can get a screenshot of this because this was really cool. Give me one sec. Maybe I can scroll back and find. I don't think my sheet goes back that far. Let me see. I get these updates like every second as to what's going on in the market. I really want to show it to you though, because I think it's really cool. And I want you to just see how this market works and how long it takes to react. It's really, really cool. I found it. All right. Give me one sec to airdrop that over. Yeah. We need like suspenseful music, not Kevin singing. That's just bad. Okay. So here it is. I'll throw that up here. All right. Okay. Right here. Folks, take a look at this chart right here. Well, it's not really a chart. It's more like the Refinitiv workspace second by second market moving news update sheet. And what's really cool about it is I actually have it up right here. I keep it up when I do my market open and close live streams or when I'm studying in the studio or whatever for earnings reports or going through earnings calls, whatever. One of the crazy things that happened was right here at 10:25:55. We got this one blurb and nothing else. It wasn't even highlighted in red, which is considered like a top headline. It was this statement right here. U.S. Fed's Mester says economy to grow below trend this year. Inflation not cooling. Okay, look at that. That timestamp, 10/25/55. So basically 10/26, right? Okay, now what I want you to see is the stock market at 10/26. Look at that. That's insane. Right there where the vertical line is 10/26. And you see the volume at the bottom going up. It's the algos right away going, oh crap, Fed says inflation not cooling. They see something we don't, sell. Boom, 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 boom. And for literally the next 10 minutes, you get increased sell volume only over that fear that inflation is not cooling. So in my opinion, when markets are telling us, hey, the economists, the smart people in the room say that inflation's gonna go down. In fact, inflation expectations are this on screen right here. That inflation expectations are that we're only going to see 0.2% of month-over-month inflation on the next CPI report coming out on August 10th, which is an annualized rate of 2.4%, which would be phenomenal. Folks, what we're setting ourselves up for is very simple. Put the pieces of the puzzle together. Market extremely nervous and reactive to inflation with really low expectations for inflation, which means even a simple beat could mean a big reaction, and a large beat or miss, as we would say, which would be like CPI coming in at like 0.5% month over month, could mean a big reaction in markets. And in my opinion, that big reaction in markets could be some form, it wouldn't surprise me because we've seen it before in this market, of a double bottom. That could be like a 23.6% retracement where we just bounce off this yellow. We get rejected off yellow here, which was the bottom in the prior cycle of the year. Or we go all the way back down to 0% and we get ourselves a double bottom. That could be a pretty good confirmation, though, that, okay, we're done. But it does make me tempted to save some cash. Look, don't get me wrong. I feel the juju's flowing through me when I see Enphase going to all-time freaking highs. It doesn't even make sense. It's pure euphoria. Okay, whatever. I get really excited. And it's like, oh, well, I should buy. Risk is highest when the chart is here. Risk is lowest when the chart is here. So keep that in mind. Oh gosh, man, I don't know. These I honestly think the Fed like craves this attention. That this is like, yes, ha ha ha. Mester's sitting in her home office. Maybe she's even watching us right now. She's sitting in her home office and she's got the QQQ up and he's like, bah, ha, ha, ha. I control the algorithms. I have a magic wand. Let me do another. Hey, Reuters, guess what? I don't think it's cooling. God. Oh, what a riot. What a freaking riot. Just shows you how sensitive, though, these markets are. It's absolutely nutty. Okay, so we do have some big earnings today, and I want to do a little bit of preview for these earnings. Specifically, I want to look a little bit into SoFi. I want to see what expectations are for SoFi. I want to know what's in SoFi's investor relations docs. This morning, we were doing a little bit of deep diving into pins and PayPal. Sorry, not pins and PayPal. It was pins and Uber on the course member live. And we'll be doing more of these deeper fundamental analyses in the course member lives on a daily basis, because I think they're some of the best ways to really learn. But what we're going to do right now is I want to line up expectations for these companies. So I also have not gotten a really exciting Bloomberg code lately, but whatever. While I get these docs up, though, let's give it a quick listen over here to CNBC and see what they got to talk about. Okay, literally nothing. They're on commercial. What? That's boring. Boring. Next, let's try them over here. See what we got. Here.
It's an important time for Cummins, to be sure. Decarbonization is a growth opportunity for Cummins, and we believe we're well and uniquely positioned because we continue to have that core business of engine-based solutions, as well as our new power business. And our strategy, we call Destination Zero, is really focused on both, which we think is critical to decarbonize our industry, starting today by advancing engine-based solutions and accelerating those solutions that
okay, this lady's actually not wrong. She needs to talk to the politicians in California, because California thinks the best way to get to a zero, like a green future, is just tomorrow turn off all the gas and taps and oil. That's it. No more carbon. And it's like, no, that destroys your economy. It leads people to move. It leads to blackouts. It leads to an economy that suffers, which then has less money to invest in green technologies and to innovate. It leads to less tax revenues, which leads to less of an opportunity for governments to then incentivize green technology. Because remember, green technology, when it first comes around, it's generally not profitable to invest in. But, let me give you an example. In Germany, they are incentivizing households to do geothermal pumps. Like literally, you can do, this was really cool, okay? You could do geothermal cooling by doing horizontal piping, or geothermal heating by doing vertical piping. A little nerdy, but I love it. Anyway, they are incentivizing these systems that otherwise wouldn't make sense. Like you spend 50 grand on a system like this, it's like, yeah, still a little too much, too high, too pricey. It really makes sense around 30. So what do the governments do? Okay, well, here's a $20,000 tax credit. There's some inefficiency to that, but it does lead to more green adoption, and then you get more investment into those sectors because there's growth, and then you get more innovation, and the costs come down. That's called investing. That's the point of government. The free market could potentially take longer to do that. Most people probably listening are very pro free market, but there's some argument to government kind of pointing in the right direction at least. But anyway, I think that's very interesting. And you can't just try to pull to California, because you end up doing the opposite. Or like California trying to tax solar more, which thank goodness that failed. But anyway, SoFi today is expecting a 17.4% implied movement. So if you have options on SoFi right now, you need to see a massive freaking move for you to make some dollars. And I don't know if you're going to see that. Most importantly, because or most critically, because you really need to see some substantial growth here. I think user growth is going to be a big thing from SoFi. They are expected to have a loss of about 10 cents EPS. It would be really cool if they could go profitable. If they could go profitable, wow, that would be incredible. Let me go to some of their financials here quickly. Selected financials. Why stupid slide shows. The slide shows they never want to give you what you want. They just give you what they want you to see. It's quite annoying. But that's okay. We'll get to the bottom of it. But anyway, okay, little rant there. It's over. Here, we'll listen to a little bit more of this while I get this document up. Actually, this. Here we go.
Yeah, I'm definitely impressed and certainly surprised by the magnitude of the move, especially in the last week or so of July, with Apple's earnings showing a breakout there above its 200-day moving average. So what that tells us is that we have some minor breakouts, and those breakouts could contribute to a more extended relief rally. But I don't think it's going to be the stuff of what we saw in July. I think it'll be a bit more muted. For the S&P 500, it had some minor resistance around 40.75, and it did manage to get.
All right. Okay. So quick look. SoFi financials. Okay. Quick look. What do we got here? We've got a bunch of loans on the balance sheet. We got $1.3 billion of cash. We've got interest-bearing deposits of about $1 billion. That's probably actually a chunk of their cash there. Okay, that's fine. So debt 4.9. All right. Let's look at cash flow statement here. This is nothing to cheer here. Let's see here. Okay. A big thing that I want to pay attention to is this right here. You see this? This line right there. Provision for credit losses. So I'm not sure how affluent the SoFi customer is, but if we see the provision for credit losses skyrocket, you're going to see their loss increase, right? Their net loss is going to increase on their income statement, which will further depress their EPS, which would make for a greater likelihood of an EPS miss. Most companies seem to have been revising up their allowance for doubtfuls, which is what this is. So I think that's a little bit of a risk factor if this comes in hot. What you can see here is they had no provision for credit losses in the 3 months ended Q1 2021, but they did have about $13 million here, 2022, which $13 million on a loan book. Loans, less allowance. Okay, $7 billion loan book. Oh my gosh. On a loan book of $7 billion. Hey, Alexa, 12 million divided by 7. Oh, there is no Alexa in here anymore. Gosh, I got rid of her right before I went on my trip. 12 million divided by 7 billion. That's like that's like 0.2%. I don't know. To me, there's a potential of that coming in on a miss. Okay, so I'm going to write that down as I want to see the SoFi. Kevin wants to see provision for credit losses, and I'd like to see cash flow would be great. I don't know if we can get that. Obviously, EPS beat would be critical. I think we want to see margins potentially also. One of the problems at SoFi, in my opinion, is they do spend a lot of money on people, on this right here, technology products and solutions right here. So technology products and solutions, they spent almost $60 million right here. And what do they actually bring in technology products? That is the interest income, right? Okay. Oh, here it is. So that's the income from technology products. And look at that right here. Technology and product development, 82 mil. So that's a negative, right? That's a money losing business right there. So I want to know, is there the potential that tech can go profitable, which would be like their brokerage, right? So can brokerage go profitable? And we also have sales and marketing. Will it stabilize or decline? That would be very interesting. Okay, so those are some things that I'm going to be looking for. We, in case you're wondering, the current Wall Street estimates for earnings are negative 11 cents adjusted and 339.82 million rev. Net negative 118. Okay, let's quickly do cash flow. Cash flow is right here. Loss of 110 mil was last time, but the change in cash was over here. Cash quiz. Net increase, decrease in cash. Ooh, how'd they do that? Net increase in cash, almost $1 billion. What did they do? Oh, proceeds from debt issuance. Oh, they did a bond raise. Oh, wow. That's juicy. Wait, did you have to raise money? Probably, because you were losing money like crazy. Look at that. You lost almost $500 million in one freaking quarter at the beginning of 2021. Okay. Good luck. Good luck, SoFi. All right. Next, PayPal. PayPal is going to be interesting. Woo. Now that I will say is one that I'm quite interested in. So investor relations. Let's see what we got over here. In the meantime, while I pull that up, let's hop in over here again. So, oh wait, no, that's an ad for titanium. Yeah, no ads. There we go. We don't like ads. All right, here we go. What is this? Oh my gosh, another freaking ad. That's it. We'll pull up. So the one thing that is really cool, shout out to Bloomberg TV, is you can kind of like pick what you want to watch. You can't do that with CNBC and Fox. Just saying. So we're gonna pull it up, and then I'm gonna get what I need to get up. All right, here we go. Okay.
News about groundings and cancellations. In Europe, they have less blamed the FAA, or indeed less blamed air traffic control and regulators. But in the US, we have heard that from a few leadership boards. What do you make of it? Has the FAA done enough to ensure that you're able to do the best job you possibly can?
What?
Well, look, all customers want.
Oh, it's JetBlue CEO. All right, listen.
Interested in airlines blaming the air traffic control teams or vice versa. We've all got a part to play in this. We are all ramping things.
Okay, that's actually really funny because last week United Airlines blamed air traffic control in their earnings call.
Airlines, and we're best when we work together and collaborate, because people want a system that just works. It is still fragile in many parts of the world. You see that, and I think that we've all got to focus on making sure that by the time we get to 2023, it's the air system that people remember from 2019 and before that.
Robin, Heathrow has put capacity restrictions on. Schiphol's done the same thing today. Do you think you could see the similar story developing in the United States?
I don't think so. You know, I think that the issues here have been much more around pilot availability at certain airlines and pilot shortages. In Europe, it tends to be more at the airports, particularly on the ramp and the baggage handlers and some of the airport teams that serve customers. And we haven't seen so much of that here in the US. So I don't believe that's going to be something that we will see here.
You indicated a few moments ago that you think the fuel prices are going to remain high. Kerosene has become very, very expensive. Does that mean that fares are going to have to stay high?
Well, I think that, you know, we've seen the fuel environment come back from where it was, which I think is a relief for everybody, particularly people filling up their cars. You know, I think it's likely to stay volatile. You know, I think what we'll see is it's sort of moving up, moving down. But it is the largest input cost for airlines. And so when fuel remains high, unfortunately, it does have an impact on the fares that customers will pay.
All right, whatever. I mean, that should be a duh. Okay, look at, so this is PayPal's last investor statement here. And there are a few things I'm paying attention to here. The first thing I notice is they barely lost cash last time on their cash flow statement. Let's see why this happened. They principal repayment of loans. What do we got over here? That cost them cash. They also bought okay, wait, principal repayment of loans receivable. Oh, they were going to receive those loans. So that was cash they received. This is money that went out for investments. Well, let's look at their operating cash flow. Let's see this here. Their free cash flow, which is net cash provided by operating activities. That would be here in yellow, 1.2 bill. Is it really it? 1.2 bill? Okay. All right. Well, 1.2 bill. This is in millions, right? Yeah, it is in millions. Okay. 1.2 bill. And then their CapEx here was this outflow of about 191. So they were about 1.1. Well, let's do the math correctly. Yeah, about 1.1-ish, just rounding, 1.1-ish. Okay, let me just subtract it really quick. Give me a second here. So what do we got? 1242 minus 191. There we go. 1051. 1051 in free cash flow is what we had, but they did have a negative change in cash, but that was okay because it looks like they purchased investments. So that's fine. So PayPal is not a story of a cash flow issue. I'm going to guess PayPal is a little bit more of an EPS driver, which I can fact check. I think I can actually look at drivers and see the percentage of what these things are. Drivers. I think so. I haven't done this in a while. I will find out. Okay, so the big drivers for portfolio US size high, sentiment, growth. Okay, quarterly acceleration. I'll come back to that in just a moment because I want to rank these, and I see that. But let's look at income here for PayPal because they're going to be reporting after the bell. So we had EPS here, 3 months ended March 31st of 44 cents, which unfortunately was less than half of what they had in Q1 2021. And it looks like their net revenues grew by roughly 8%, spitballing there, but their transaction expense went up substantially here, disproportionate to the amount of actual growth they had. So this is plus 2275 or divided by. Yeah, we had about a 24% increase in transaction expense. I want to see why. That's interesting to me. And we had customer support and operations. That's fine, stable. Everything else seemed relatively stable. Their operating income was less, though. And it's really because of this boost right here in transaction expenses. So to understand what that is, I'm going to very quickly go to their last annual file. transaction expense. Transaction expense. You know, the search button never works anymore these days. That's all right. I'll get to the bottom of it. I'm going to find out exactly what they mean by transaction expenses. Again, my assumption is people doing like, I'm going to send you money, right? And then they have to service that. So maybe they have to give a cut to Visa or the banks or whatever, right? But I want to hear what their explanation is. Also, to try to get an idea of, hey, is there a reason why we saw a bump in that? And can we potentially expect that to go down in the next report, which comes out in roughly 30-ish minutes here. So we'll figure that out. I will do a little bit of digging, and let's take a quick listen in. Let's see who's talking over here.
Bid one, so to speak.
Oh, it's the FTX guy.
Wanted it. So, I think we may still try and find other ways, to propose this. And ultimately, I think that there are a lot of people with a lot of interests in this particular case. I think a lot of people are looking for ways to make fees or make more fees. That's what we're trying to stop, is just let's stop bleeding out this asset and just get, the funds that remain back to customers as quickly as we can.
Can I just push you, though, on what you would do to maybe reformulate your offer? Would you add more money to sweeten it?
So, I think there are a few terms that we can look at, but fundamentally, we're already taking zero spread on the asset. So it's not like there's a lot of spread left to give there. And this is a comparison, a lot of the bids that we are hearing people thinking about were giving, 10, 20, 30 cents on the dollar back to customers. So, taking the bulk of it for the person, buying it out. I think the biggest thing for us is, probably going to be going through a process of, appealing directly to, the core real stakeholders here, the customers of Voyager, and, making it clear that, this is something that we'd love them to consider. We think makes sense for a lot of them. And even if they accept it's non-binding, rather than, I think that the sort of like immediate committee that's been looking this on their side, has been looking for ways to, probably get more, fees out of this, but ultimately there, is a potential for customer action here.
Before I move on from Voyager, have the lines of communication heated up or warmed up a little bit between you and Voyager at all?
So, we've over time maintained a good relationship with, the sort of like, previous leadership of, the leadership of Voyager throughout, their life cycle. I think, we're having conversations, and, we just want this to be something that customers are able to consider. I think that, right now we are waiting to hear back on, what the sort of current folks managing the bankruptcy process are planning to do next year.
All right, because we're watching that. We want you to come back when things do maybe reignite here. You are announcing as last week that your stock trading to U.S. users, you're opening that opportunity, no trading fees or payments for order flow business model. Talk about how that model will work, and how are you able to do that and still make a profit?
Totally. So, at the very beginning, we're not going to be making a profit on this, is the actual answer. And, we want to...
Hey, he's honest. That's what I was thinking. That's bad for Robinhood, by the way.
Before we try and, think about, focusing on monetizing this or anything. But, at its heart, we think that, payment for order flow can act sometimes to obscure the information that ultimately customers get. And that, if we do end up with fees here, we're strongly thinking about just trying to make those explicit and trying to make those low and, hopefully more than just competitive, rather than thinking about this in terms of, sneaking them in. And we talk a lot about stocks there and the fees associated with stock trading, but probably the bigger area, and the area where I think it's egregious in a lot of places, is when you look at stock options. On a lot of platforms, customers are losing, 20, 30% on their options trades to the spread, to PFOF. We're looking hard at ways that we can take that number way down.
Sam, was it your decision to hire Larry for your commercials?
So it was it was an idea that was pitched to us. So we had probably a couple hundred ideas pitched to us, and we sort of said no to the first, 199, and we saw number 200, and we're like, all right, that's a commercial. Like, we don't need to see number 201.
Okay. Well, we're following everything that you do because we're watching crypto just above 23,000. One last question. Are we getting close to the end of the crypto winter?
I think we could be. And ultimately, so much of this is going to be based on what happens in macro that it's going to be hard to say for sure, that sort of wherever, close to the end of it. But what I will say is that, if we were on a macro level at the end of the sell-off and, we saw sort of a continued recovery in stocks, I think that we would be at the end of the crypto winter, and I think we would see a recovery on the crypto side. And we have seen that starting. Okay. The only caveat to this is if we see stocks plunge again, I think we're going to see more pain in crypto as well.
Oh, yeah. And we do have the Dow down about 302 points, a little bit of nervousness in the markets, at least throughout this session. Sam, great to have you. Thank you very much.
Yeah, I mean, I think that's actually a really good point is the crypto market is just going to follow the risk asset market in the stock market. And that's going to, the stock market is trying to predict, okay, what is the economy going to look like in the next 12 to 18 months? And over the last 6 weeks, it's been telling us, well, we're going to go through a little rough patch, but it's probably going to look pretty good. And the rest of the 2020 decade is going to be freaking dope and awesome. And so you've actually been seeing that kind of rebound in Ethereum and Bitcoin as well. Not necessarily all of the alts. I think there's a little bit of gun shyness now in the alts, given the severity of the fall that we've seen in a lot of the crypto assets that exist. But especially like some of the shady practices that have occurred. Like, for example, when I had an interview with ASOBs last week, and we talked about this potential Axie Infinity scandal, which video you can obviously watch on my channel. It's worth watching. That leaves people a little bit more gun shy. Of course, then you've got concerns or maybe not about what about when we get to Ethereum 2.0? Who knows? But for now, there seems to be a lot of excitement in the alignment of crypto as a risk asset with the broader market. And right now, the broader market is happier than it was 6 weeks ago. Still, though, at bottoms relative to Feb 24, March 15, and like the third week of April it was. So very, very interesting. But that was Sam Bankman-Fried for you. Okay, now let's look at PayPal. So I found the section. So transaction expenses is the cost they incur to accept a customer's funding source of payment. Now, this is a little bit of a red flag for me for PayPal. That doesn't mean PayPal won't do well after hours. I have no idea. But when we go over here to PayPal Holdings and we look at, where is it? We were just on it. Here it is. We look over here at this, that's the cash flow statement. Hold on. Okay, Kevin, which freaking doc is it? I just had it. Anyway, when you look at the income statement, wherever the heck it is, there it is. When you look at the income statement and you see net revenues pump up, somewhere around 8%, but transaction expense goes up 24%. The concern I have is what control does PayPal actually have over third-party transaction expenses? See, revenues are already net revenues of the other end, not the funding source, but the sending source. Not funding source. Expense is the funding source. So that would be like, okay, let's say you go pay for something with Visa, and you take this money out of your bank or whatever to go. It's a debit transaction. Let's say it goes through your bank. There's going to be a fee split for Visa and the bank. PayPal has to pay that. But then on the flip side, PayPal gets a share of the fact that they were the merchant, or not the merchant. They were the payment processor. Potentially in conjunction with the receiving, Visa or MasterCard or whatever, Square Terminal or whatever, at the merchant's end, which I guess there wouldn't be a Square Terminal if they're paying with PayPal. But anyway, the point is, I don't know how much control PayPal has over those sorts of third-party transaction expenses because it's really what Visa and MasterCard are charging them. And those companies are freaking killing it. Really interesting. So I want to see what happens there with PayPal. And we see if they can actually grow EPS. Let's see what the expectations are for PayPal. So PayPal has expectations for PayPal has a that's still SoFi. Remember 17.4% implied volatility on SoFi. But for PayPal, we should see a little bit less madness, 11% implied volatility. They are expecting EPS adjusted to be at 86 cents, GAAP to be at 45 cents, revenue to be at 6.8 bill. That would actually be some growth. Net income of about $1 billion. That would be about double where they were in the last one. So, they've got a little bit of a reach there, but we'll see what happens. All right. 9 minutes to go before the market closing. Uber has been kicking butt all freaking day, even though they cannot figure out how to minimize the fact that it becomes more and more expensive for them to handle these transactions as more and more people drive with Uber. But Uber's growing very nicely. It's just the big question is going to be, are they going to be able to actually grow profits? Amazon at 134, taking a little bit of a backseat here, a little bit of a pause on that rally that we saw after their earnings. Let's see what else we have. We have Faraday Futures 20% today. Wow. Senate Democrats got a cannabis bill. So we see Aurora Cannabis moving 13%. Peloton risk trade 11%. AMC 10%. Wow. You're getting a little bit of a broader rally here. Let's see if anything's getting really hurt here. Rite Aid, Caterpillar. These were staples, folks, like staples and industrials here. These were, companies that people flock to during the fear that in January, where people are like, oh no, if we go into a recession, quick, where should we hide? Oh, I know, commodities will go up. Let's buy Caterpillar. All right. That's what it did for you. Not much. So we also have Occidental Petroleum reporting today, which is a big recent Warren Buffett play. He really, I think, played that well at the beginning of the year. It hasn't performed as spectacularly in just the last few weeks, although it has caught up with a broader market rally after a little bit of a setback. So it's not doing terribly. I mean, it's still up like 2x from the beginning of the year, which is incredible. The thing was trading at like $30. So it's really, really done well since the beginning of the year. Warren Buffett really started DCAing in about February, it looked like, and then sort of increasing his position throughout the curve. So I don't think even Warren Buffett got the full double there, but that's okay. I think, though, it's worth mentioning that because sometimes we forget that. Well, we're like, oh, wow, they probably got the perfect bottom. No, they didn't.
Emojis to the CEO, right? And they go out and it causes a huge stir, and they get mad, and
Scott Galloway has a word for it, but we can't say it on TV. Okay, it's something posting.
Oh yeah, I know exactly the word. It begins with an S, but they're fighting fire with fire. So now, does any of this matter? And it probably won't matter because, again, I'll get back to what I've reported over the weekend, what I think is now becoming somewhat common knowledge. And you could see it based on the arb play, the professional arbitrage or trader play, which is buying Twitter. People are dipping into buying Twitter now at its current level at around $40 a share. We should put up a stock chart. 41. That's what's up a little bit. And thinking that Elon is going to either settle at a higher price or the judge enforces the whole thing, 5420, the $44 billion deal, even as it goes to an appeal, which he'll appeal if he loses in the Delaware Chancery Court. He'll appeal to the Delaware State Supreme Court, and that's where there may be a settlement in the sort of as the impasse screws around with the stock price and Twitter's earnings continue to get really squishy, which it always is. It's a horrible business. The whole thing is this, though. Let's just say the judge says you have to buy it, and he agrees to buy it. Who would want to work for him at that point? All he does is
people are clamoring to work for Tesla.
Yeah, but all he does is urinate on Twitter and its business model, and it's really. I mean, if I wanted to, if I was like I could see a new person wanting to work there because I want to give it a try. I like Elon's style, but the old guard. I could see them just all running out the door, can't you? I mean,
I don't. People work very hard at that company, but maybe He might argue you get rid of the old guard, you bring in some fresh voices. We've both been at networks where they cleaned out everybody and brought in the fresh faces, and Channel 6, Columbus, Ohio.
Then stuff started falling apart. Listen, you're right. I mean, I'm sure they can find other coders and other people to steal customer data from unsuspecting people like me and sell it. But I mean, that's essentially what they do. These Silicon Valley types do. But it's an interesting thing going on here. Again, getting really personal. It's interesting. Lonsdale the PR person, was really direct with us and frank. He thinks it's a joke, but it is what it is. And trial set for October 17th. I guess I better book my room at the Holiday Inn in Wilmington.
Well, they're shaking the trees, and
is that where the Chancery Court is in Wilmington? I hope so.
Yeah.
I hope Delaware's a state. I mean, Wilmington is the city. Capiche? I just hope it's not in some horrible.
There's a great train that just goes right.
I just
by
hope it's not in the town of Chancery, which has one bar and a McDonald's or something.
Nothing wrong with that.
Okay. Anyway, boy, that guy's got some loud, kind of obnoxious opinions. I hate to say it. That's interesting, though. I don't know. How do you feel about that? This idea that, I don't know who would want to work for Musk after this. All he does is urinate on Twitter. I don't actually agree with that. I think he uses Twitter, quite frankly, the way it should be used is you express your opinions. If you think population decline is a bad thing and people aren't having enough babies, talk about it. If you think that Democrats are really losing it and they risk losing their majority in the Senate and House, then it's your right to be able to talk about that and share your opinion on Twitter. Twitter is that public forum. That's what it's there for. So I don't know how much that really affects people wanting to work for Elon. I think the anchor was correct in saying that people are lining up to work for Elon. So I don't know. I think sometimes they bring on these shock jocks just to say crazy stuff, and it seems a little nonsensical, but whatever. All right. Let's see what we got over here as we go into market close.
Big question is, what will that mean for AMD and gross margins? AMD stock, though, still underperforming the S&P 500. But if you look at AMD versus Intel just over the last 3 months, look at the difference between. You got AMD higher, 10% higher just in the past 3 months versus Intel, negative 19%. We'll have AMD's earnings in less than 15 minutes. Thanks.
And we will look to you then. Christina, thank you very much. Mike, I do wonder if there's more focus. I was watching this group all day today to see if there would be any kind of reaction with Taiwan, with Nancy Pelosi there, obviously, because the chip sector has so much on the line when it comes to these tensions, which appear to be escalating between the U.S. and China.
Yeah, not specifically. It didn't seem like that's the main thing on people's minds. It was much more potentially about any kind of China response and more of a macro geopolitical sort of risk appetite play. But even that seemed to have fizzled over the course of the day.
What do you see in the internals?
Very mixed. New York Stock Exchange, slightly positive, Brett. The NASDAQ's been negative. Now, you've mentioned that on the Dow, Caterpillar's decline has had an outsized influence. You see there just about even here, 50-50 advancing versus declining volume. Wanted to take a look at Amazon as a check-in on a 2-year basis. Huge move higher over the last few weeks, was one of the engines of the S&P's lift in July. But look at that. All it really did is bring it to the underside of that prior long-term range. Didn't get even up to the March lows. So I think it's definitely at least a wait and see right now. The volatility index is still below, pretty much near the bottom end of its own range that we've been in for a little while, but it's inching up. The bond market volatility is not helping here. Equities can't really stay asleep when you do have the bonds whipping around as they have been, Sarah.
Super volatile with the 2-year yield back above 3%. As we head into the close, we are at the lows. We're making new lows, down 400 almost on the Dow Jones Industrial Average. Obviously, the big impact there on Caterpillar, which is dragging down the Dow.
30 seconds to go before the market close. Just taking a very brief look here at the NASDAQ, down about 1/3%, dropping into the close. Tesla's only up about 1%, dropping into close below support end phase, 4%. Pinterest sitting at 11. Uber looks like it is still running. Is it? Yeah, Uber's still running at 19%, still climbing into the close with increasing volume into the close. Let's get the bill.
Final hour of trade, it has gone lower. Tesla's holding it up a little bit, but Microsoft, Apple, Amazon, Intel, all a big weight on the tech-heavy index. Small caps go negative at the close. That's it for me on Closing Bell. See you tomorrow, everyone. Now into overtime with Scott Wapner.
All right, Sarah, thanks so much. Welcome, everybody, to Overtime. I'm Scott Wapney. You just heard the bells. We're just getting started here at Post 9. And a slew of notable earnings are imminent. Starbucks, PayPal, AMD, Electronic Arts, and others. Our reporters, as always, standing by to break in the moment those numbers hit. Also ahead, I'll speak with Tom Lee's star chartist, Mark Newton, on why he thinks a once hot sector is about to roll over and what that might mean to your money. We begin, though, as always, our talk of the tape, the battle over this bear bounce, whether we have truly turned the corner or not. This is more Fed speakers fuel the debate over the market's reaction to the most recent meeting and what lies ahead. Let's take all of that to Virtus Investment Partners Chief Market Strategist Joe Terranova.
Yeah, whatever. Okay, listen, the most important thing right now is that we've got earnings coming up, and that's Caesars, which is, here it is. Caesars reports loss of 123 mil, big beat on adjusted EBITDA, almost $1 billion, 978 mil versus the estimate of 887. Net revenue, 2.8 billion. That's good. That is a really nice same store EBITDA beat right there. Waiting also, okay, EA comes in. Maintaining dividends of 19 cents a share, EPS of $1.11. It sees fiscal year revenues, fiscal year net of 793 million, EPS of. This is a little tricky to read how they wrote this. Hold on one second here. Okay, here we go. Q1 revenue, adjusted revenue, 1.3 bill. Slight miss. The estimate was 1.32. However, the EPS for Q1 was 47 cents. The estimate was 28 cents. So that's pretty good. Their forecast is actually a miss. 1.73 to 1.78. That's a midpoint of about 1.755. The estimate was 1.86. So that's a miss on the midpoint there on forecast. That's a slight miss there on revenue for the first quarter. However, their EBITDA did beat. So we'll see what happens there with that was EA. Caesars Entertainment beating, waiting for Solar Edge, Occidental Petroleum, Starbucks, Airbnb. Airbnb comes, holy crap, EBITDA 711 million. The estimate was 591. However, Nights and Experiences booked came in at a miss, 103.7 mil versus 106. So a little bit of a miss there on Nights and Experiences, but that bottom line, really nice. Can we get a forecast? Forecast. Q3 beat. Forecast is a beat. That's good by about 0.04 bill. That should be good. Bottom line and forecast on a beat. Airbnb flat though right now. Interesting. I wonder what, I'm going to throw this up here. I wonder what the market's seeing on that one. Oops. That's definitely the wrong button. There we go. Airbnb to buy up to $2 billion back in shares. Gross booking volume beats 16.98 billion versus the estimate of 16.92. We're actually getting the stock dropping on this. I'm not exactly sure why, because we have a beat on the forecast. We have meat on revenue. The only miss was Nights and Experiences. That could be why, because Nights and Experiences, we had a 106 mil estimate, and we only had 103.7 come in. Waiting for Starbucks, Occidental Petroleum. We saw Caesars gaining about 4% in the after hours here. Waiting for Solar Edge. That could be a big mover. Waiting for PayPal. Waiting for SoFi. That'll be a fun one too. And waiting for AMD. So we're on standby for these right now. Airbnb again readies that $2 billion buyback. The market does not seem to care. I mean, but then again, the stock did run 4% today. If we go to the daily chart, we have been on a nice uptrend here. I mean, this is almost a 40% or so gain right here. Very, very nice here on Airbnb. So good move for Airbnb on moving with the risk market here. Let's look at Caesars, which just reported. Let's see here. Let's go to I don't know what their ticker is. SE. I don't know why that's such a hard thing to spell. Anyway, there it is. Caesar also had a very similar kind of move as Airbnb here, moving from about 35 to 49. After hours, though, up about 3%. Waiting on AMD. AMD is not out yet. SoFi comes in with, that is a nice beat. Top and bottom line beat. Let's go. 356.1 million. The estimate was 339 million of revenue. Big beat. EBITDA comes in double at 20.3 million and raises guidance. Holy crap, it's a triple beat. Dude, it has been a while since I've been able to say triple beat. Oh my gosh. It's only up 3% right now. That seems like a steal because that's incredible. I mean, I want to see the real details of that, but to me, that could be a 10% mover right there on a triple beat like that. Woo! Okay, waiting for PayPal. Airbnb now down 4% after earnings report. Why? That's right. Yeah, SoFi now up about 6%. Airbnb, holy crap. What did they say? Now they're down about 10%. What happened? The forecast was a beat. What happened? $2 billion buyback. Q3 will be strongest yet. What the F? Oh, Q3 nights and experiences. Year-on-year growth stable with growth in Q2. That could be something that's flagging them as maybe not enough growth here. But what? 10% on this? Oh my gosh. Okay, so Airbnb gets screwed here. SoFi up 6%. That doesn't seem, I mean, I want to see those allowances for doubtful accounts too. So there's still some more work to look at there, but that's quite interesting. Okay, so I don't know why Airbnb is getting absolutely killed here, but that raise. Okay, AMD is out. AMD comes in with EPS of 1.05, gross margin of 46%. Gross margin estimate slightly misses by 0.2%. Operating margin beats, though, by 0.2%. Revenue comes in at a slight beat. However, forecast comes in at a meet. So they kind of met expectations here. It's like really, really close. The market doesn't seem to like close, folks. They don't like close at all. You need to like big beats in this market, apparently, for the market to care. But this is a 5% move right here on AMD right now. Okay, interesting. So AMD moving down. SoFi again on the triple beat. Waiting for PayPal now. Still trying to figure out why Airbnb. I mean, the only thing would make sense is that nights and experiences miss of about 3 million. I'm sorry, that's about 2.3 million nights and experience miss. It's about a 2 to 3% miss on that. So I'm a little surprised that despite, forecasts going up and everything else, I don't know, that's a little bit of a shocker. Okay, Starbucks comp sales Q3 coming in at 3%. The estimate was 4.26. That's a miss. Starbucks guidance remains suspended. Net revenue comes in at a meet. U.S. comp store sales meet expectations, up 9%. International comp sales down 18%. Well, it's probably because of China. Drop that. Let's see here. Same store sales averaged out 9%. And China comp sales come in at minus 44%. EPS comes in at 84 cents. The estimate was 76. Operating margin decreased 400 basis points. Okay, so you're definitely getting some pain from these. Let's look at S-Bucks here. Okay, well, see, it doesn't make sense. S-Bucks, they have a slight miss, probably dragged down by China, as their operating margin comes in at 16.9% versus the 20.4% expected. Yet they're green like a couple percent. AMD kind of meets, like barely misses, and it's down 4.5%. Okay. SoFi has a triple beat. It's only up 5%. This is a very tentative market, folks. Caesars, it ran at first, but now it's only up 2.7%. And then you get Airbnb. What? Now it went down for some reason. It went all the way 10% down, and now it's only 2% down. Whatever, man. Whatever. This is a weird market. Waiting for Occidental Petroleum and PayPal. PayPal, this is why after hours is so funky. PayPal comes out in about 5 minutes. So let's see if we can get some more. Okay, AMD Q3 forecast. That's a beat. The midpoint was 6.7 billion, and they're coming in with 6.81 billion. So that's a slight beat there on forecast on revenue. So that's actually decent. No, I read that backwards. Scheisse. I'm sorry. The estimate was 6.81. It actually came in at 6.7. Sorry, slight miss. My bad. Sorry. But they still see fiscal year adjusted gross margin at about 54%, with the estimate being 53.9. That's fine. So tiny miss on guidance. We have a little beat on operating margin. Gross margin missed by 200 basis points. I mean, this is like, I mean, it doesn't seem like a bad report at all. It's pretty much in line, I would say. The SoFi triple beat is great. Airbnb, we see a lot of volatility there with that buyback being announced. Starbucks royalty rewards program, 90-day active members in the U.S. increased 13% year over year. Well, that's good. Margin decline reflected inflationary pressures at Starbucks, investments in labor, including enhanced wages. Yeah, that's actually one of the things that we saw in their last earnings call. In their last earnings call, they talked a lot about how they were investing more and basically trying to have less turnover because they were having a lot of turnover. Like, people just ain't staying. Oh, Solar Edge. Solar Edge comes in with a 95-cent EPS, misses the $1.39 estimate. Sales of 727 mil, which is actually a slight beat of the 725. So we have a sales estimate beat, which is good for like an end phase, but that bottom line, not so great. Forecast raised, though. That's really good. The midpoint forecast now 825 mil for the next quarter as opposed to 815, which was the estimate. This should be going up. Even with that bottom line miss there, I don't think that's too dramatic there. S-Edge, come on, S-Edge. Never mind, it's down 8%. This is why I don't play earnings. And I don't profess to play earnings. They are so stupid. They're all over the place. And it's fine. It's fine. But, like, they raised guidance. Something happened in the bottom line, though, because it is a large bottom line miss. But they beat on sales. They raised guidance. This is great. Hey, but maybe it'll finally give me the discount I want on Enphase, but probably not. Nah, Enphase is dropping 2% on that one. See, like, Enphase, phenomenal company. I'm just telling you. Like, I want to own a lot of Enphase in the future. I can't buy it at these prices. It's stupid. I'm sorry. I can't do it. As much as I like it, I can't do it. Thank you, Breakneck Trent, for saying that everybody should smash the like button. All right, so we're waiting for PayPal, which is coming out in 1 minute, folks. 1 minute on PayPal. That should be fun. PayPal. Let's get some, like, awaiting serious information music going. Okay, here we go. Waiting for those PayPal earnings. All right, folks. Caesars, don't know what they want to do. EA posts higher sales and profit. But that Airbnb volatility is still confusing. $2 billion buyback with that revenue miss. Barely, though. And that nights and experiences miss was probably the big one for Airbnb. SoFi, that triple beat. Still, though, loss per share of 12 cents. No word yet on those allowances. AMD gives lackluster forecast after PC slump hurts sales. And, folks, here we go. You ready for PayPal? Dun, dun, dun. Oh, now we're bowling. Welcome. Thank you for being a member of the chat here. Remember, if you want to become a member of the chat, it's different from being a course member. You just press the little button next to subscribe. That button does not show up on the iPhone, and it does not show up on the iPad. It only shows up on, it could be a Mac or a computer of some sort or an Android. But once you join, you can chat no matter what your platform is. And you get little badges in the chat. Well, and you can chat, which is kind of cool. All right, folks, come on. PayPal. It's scheduled to be out this minute. They have another 20 seconds to go, but we don't have it yet. So buckle up. Come on. All right, I guess they're going to be late. All right, that's bizarre. PayPal. Oh, there it is. A minute late. Beat on adjusted EPS, 93 cents versus 86. Net revenue misses, 6.81 billion versus 6. Wait, no. That's not a miss. That's a me. It's actually a slight beat. 6.81 billion on revenue versus the 6.79 billion expected. That's good. Okay, good. So a slight beat on bottom line. It's actually pretty decent. That's a 3 plus 4, 7 cent beat on the bottom line, coming in at 93 adjusted EPS. They slightly beat on revenue. We have Blake Jorgensen's going to be the CFO, whatever. Transactions grew 16%. Transactions per account grew 12%. We have total payment volume of 339.9 billion, growing 9%. Let's see here. Fiscal year 2022 revenue expected to reach 27.85 billion with total payment volume of 1.4 trillion. 2Q Venmo total payment volume grew 6%. So Venmo is growing at 6%. Approximately 10 million new net actives expected to be added in fiscal 22. Sees 900 million of cost savings. Chief product officer retiring. Authorizes $15 billion share back. Total payment volume misses, coming in at 339.79 versus the 344 expected. Welcome, Dorothy and Faraz. Welcome as new members of the channel. So it's a beat. Let's see how it's moving. PayPal. Oh, PayPal up 7% after hours here on that, probably on that $15 billion buyback plan. And Airbnb with a $2 billion buyback, not seeing the same love. Airbnb sitting down 5.8%. SoFi with a triple beat, seeing 5.7% to the upside. PayPal now up about still about 8.5%. Do want to see if we can get. Let's see here. What can we get? SoFi. I want to get SoFi's allowance for doubtful. I want to see how that pumped because we did talk about that coming up. All right, here we go. So statements. Cash flows, balance sheet, where's the income statement? Stand by. We will find you. There we go. No, still no. Come on, SoFi. Why do you have to make it so complicated? Ah, there we go. Okay, cool. So SoFi for the 3 months ended June 30th comes in with provision for credit losses. Whoa, only 10 million. That's it? Wow. Dude, that's really good. They did not increase their allowance for credit losses at all. Wow. Wow. All right. Okay. All right. Very good. Very good. That's pretty impressive. So anyway, that leaves you with PayPal up almost 10% now, folks. SoFi up 5.3%. Airbnb getting smashed with about a 6% declining. Enphase down about 2.3%. Unfortunately, following Solar Edge down, which is down about 10%. Ouch. And that was a big miss on the bottom line there. Starbucks, now up about 1.53%. Oh, it was up after earnings as well. And then, of course, AMD with that weaker forecast, only down about 3.5, trying to recover a little bit here. So there you have it, folks. Thanks so much for being here. And we'll see you tomorrow morning for another Market Open live stream. Unless, of course, you don't want to do another Market Open live stream. I don't know. I kind of suspect maybe you do. I don't know. See you tomorrow. Bye.